In today's Money Watch, we are talking about the economy. The stock market soared after President Trump's re-election. And later today, the Federal Reserve will announce its latest decision on interest rates. And it's times like this, we are thankful to have CBS News business analyst, Jill Schlesinger here to break it all down. Good morning.
Good morning.
All right, so what's behind the stock market jump yesterday? Let's talk about it.
Investors are looking at two aspects of a pro-growth Trump presidency. They're saying, hey, the tax rates that were cut back in the 2017 legislation, they're going to keep being as low as they are. They're going to extend those tax cuts. The second aspect is deregulation. So if you looked at the sectors yesterday that were kind of interesting, that really popped, energy, banking, crypto, all this together is what investors believe is going to be a pro-growth economy that benefits pro-growth companies.
All right, so during his campaign, he talked about the across-the-board tariffs. I mean, what does that mean, and what type of impact will that have on our pockets?
You know, what a tariff is essentially is like a fee that's slapped on an imported product, and that adds to the cost of that product. So now when you're the person who brings that product in that company, do you pass that along to the customer or not? That's the question. If you do, when we see higher prices, I think a lot of people could be surprised if we see across-the-board tariffs, we could see higher prices.
Right.
Possible. Also, what happens is we have a strengthened dollar. That's great if you're going to travel abroad. It's great if you're a domestic producer. It is not good if you're an exporter. So we'll have to wait and see what these tariffs ultimately do to the economy.
All right, the Federal Reserve, they conclude a two-day meeting today. What's expected? So
this is pre-scheduled, nothing to do with politics. So the Fed has 8 meetings a year. It is expected that they are going to cut interest rates again by 1/4 percentage point. And really the rationale would be that the inflation rate is coming down. And I think that this is good news if you're a borrower, obviously, because you want to see interest rates come down.
A 30-year fixed-rate mortgage spiked on Wednesday. Why?
Okay, so mortgage rates are actually controlled not by the Fed, but by the marketplace. And so what happens is when you look at those interest rates, we saw that bond prices, this is confusing, so just
No, that's what we have here.
Bond prices went down, yields went up, and that is what those yields are keyed to. Mortgage rates are keyed to 10-year treasuries. 10-year treasury yield went up. Why? Because what the investment community believes is that Trump policies will add to the debt and the deficit, and that is bad news for bonds. It means that bonds are less valuable and interest rates could remain higher for longer. So
the Federal Reserve Board, they raised interest rates to combat inflation. Did it work?
Well, sort of, yes.
Sort of,
wait to see. Yeah, we're on our way to a soft landing, and that is good news.
And soft landing is a good landing.
Yeah, indeed.
All right, Dollar Jill, thank you.
Sure.